Back-to-back gains in the soy complex turned the chart picture positive for soybeans. Corn futures were slightly higher, and despite disappointing export news, wheat futures found a way to push to the upside. Live and feeder cattle were lower, and lean hogs were mostly higher at the end of the week.
Live from the springboard to the weekend via Farm Journal broadcast, this is AgriTalk. This afternoon, it's a conversation with Mike Mock from Mike Mock Consulting. I'm handsome newsman Davis Michelson. Now, welcome your beloved host, Chip Flory.
All right, Davis, here we are, Friday afternoon. How'd that happen?
My secret was just keep going. Just keep going, and here we are.
I'm telling you, when you don't have to take a couple of plane trips, and you don't have to travel, and you don't have to do this, you don't have to do that, and you can just kind of stay put and keep working, time just flies by.
Boy, that sounds like a hollow, bleak existence for a week. Wow. No plane trips, no glad handing. Huh?
I'll take it.
I suppose you will. You've been traveling a bit this year, haven't you?
Yep. That's enough for now. Enough for now.
Fair enough.
Welcome to AgriTalk. I'm your host, Chip. That is Davis.
Yep.
And the soy complex, an impressive move here at the end of the week. We're going to talk with Mike Mock about exactly why what happened in the bean market happened today. But another 15, 16, 18 cent gain in beans here to wrap things up at the end of the week. That was a very nice move. And then look at wheat. Wheat gets some disappointing export news. Evidently had it all factored in at the start of the week when it was making new contract lows. We get some export sales cancellations the last 2 days of the week. Market's trying to trade to the upside. So, you know what we call that, don't you?
What do we call that?
We call that a failure to go down on negative news.
Oh, that sounds like the kind of thing we like, actually.
Yeah.
That sounds like our kind of thing.
That's if you're going to be bullish and if you want prices to move to the upside,
I do.
That is the kind of thing that you need to see happen after a market has made new contract lows. So
right on.
Yeah.
Okay.
Yeah.
Well, that's exciting.
And then the cattle market, let's just call it a little bit of backing and filling in there today because the cash market really performed pretty good this week. We'll get to some of the details of that. All right, let's get to the news. What do you got, man?
Sure thing. Well, Chip, USDA this morning announced China canceled the purchase of 110,000 metric tons of U.S. soft red winter wheat. It was the second consecutive export sales cancellations, and traders expect more in the days ahead. Still, July SRW wheat futures opened fractionally higher, slipped through support at 540, then recovered to post a high-range close. The SRW market is in an organized price slide with a series of lower highs and lower lows, and this week's leg lower should start another round of price consolidation. USDA put wheat carryover at 673 million bushels in this morning's S&D update. That's a 15 million bushel cut to estimated wheat exports is the reason. July HRW wheat futures 13 1/4 cents higher, 574 1/4. July SRW wheat up 10 1/4 to 550 1/4. July spring wheat closed at 666 1/4, up 8 3/4 cents. Chip, it took us till like 3.5 minutes in to even mention the reports.
Yeah, and the report detail that you just delivered is like the only detail on the supply and demand reports on the domestic balance sheets anyway. So it bit of an increase in the carryover on wheat, but on the week, get this, July SRW futures down 11 cents. July HRW futures up 18 3/4, and July spring wheat futures up 18 1/4. So big spread movement for a second consecutive week.
USDA made no changes to the supply or demand side of the balance sheet for corn. Carryover was unchanged from last month at 2.172 billion bushels. USDA did lower the national average on-farm cash corn price a nickel to $4.75. Corn futures used spillover support from gains in wheat and soybean futures to end the day near session highs. May corn is knocking on resistance at $4.40 and posted the highest close since February 13. USDA left its estimate of Brazilian corn production unchanged from last month at 124 million metric tons and raised the Argentine corn crop 1 million to 56 million metric tons. Today, May corn futures were 1 3/4 cents higher at 4.39 3/4. July corn up 2 1/4 at 4.51 3/4. December corn futures closed at 4.72, up 3 cents on the day. Can we call that May close at 4.39 3/4 a SAS close, Chip?
Sure, yeah, because that 440 level is very important. Yep, no question. But Davis, I'm telling you, there are analysts that went straight to the Brazilian corn production estimate, saw that it was unchanged at 124, and called this report a non-event. That's the only thing that they were looking at in this report. On the week, July corn up 15.5 cents. December corn up 12 3/4. That seems like it's working on a low to me.
Yeah, baby. Well, back-to-back days of aggressive short covering lifted May soybean futures to the highest close since February 13. USDA cut 1 million metric tons from its Brazilian bean crop estimate, dropping the crop peg to 155 million. USDA's Argentine bean crop estimate was unchanged from February at 50 million metric tons. U.S. bean carryover was unchanged from last month at 315 million bushels, and USDA made no change to the supply or demand side of the domestic balance sheet. Even the national average on-farm cash soybean price was unchanged from last month. That's at $12.65, Chip. May beans 17 3/4 cents higher, 11.84. July up 19.5 to 11.95 1/2. November beans closed at 11.73 3/4, up 20 cents today.
Yeah, getting back up to that 12.65 level sounds pretty good right now based on where the markets are in today's trade. July soybeans on the week up 34 1/4. November beans up 34 cents. July bean oil on the week up 109 points. And July soybean meal up $10.40 a ton. On the new crop corn soybean price ratio, 2.49 to 1.
Oof. All right. Well, cotton carryover is now estimated at 2.5 million bales. That's down 300,000 from last month. USDA cut 330,000 bales from the 2023 cotton crop estimate. That was partially offset by an increase in unaccounted use. July cotton gave back all of yesterday's sharp gains, 400 points lower today, 93.78, Chip.
Good grief.
Right?
What in the world? We yesterday we were up like 390 points. Today we're down 400 points. After we get a cut to 2.5 million bales, that's exceptionally tight. I'm not exactly sure what's going on in that cotton trade. But all of that, and on the week, July cotton was up a point.
I love it. I love it. On the livestock, the cash cattle market is higher again this week, and heavyweight choice graded boxed beef prices traded to the highest level of the week, but profit-taking sent futures to a low-range close. April fat cattle $112.5 lower, 187.60. June futures down 117.5 on the day to 183.42.5. April feeder futures down $2.20, 254.10 at the close. And quickly on the snout side, front month hogs made it a clean sweep for the week and closed lower for a fifth consecutive session. April hogs 15 cents lower, 84.37.5. June up 67.5, 101.82.5, Chip.
Yeah, some of those back month contracts were up the last couple of days. So there's some variability in there, no doubt about it. April live cattle on the week down 85 cents. April feeder cattle down $3.90. April lean hog futures down $3.70 on the week. Mike Mock Consulting is our guest analyst, and he is up next here on AgriTalk.
Our name says it all. AgriTalk. What more do you need to know?
Welcome back to AgriTalk. I'm looking. I was.
Are you all right now?
Well, okay. Here we go. I should be able to get it from here.
Okay.
No, I still can't get it.
Is it Saturday? Am I even supposed to be here right now? Huh?
No. The game hasn't started. I was looking for the score of the UNI Panthers game against the Belmont Bruins in the Missouri Valley tournament. Game starts at 2:30.
Okay.
That is Brian Grady's alma mater right there, and so it's right there in Cedar Falls. Got to pay attention to what's going on there.
I got a piece of paper from that same institution that says I'm educated.
Really?
Yeah, absolutely, I do. The paper says. Paper doesn't lie.
Paper does not lie. That's right. And then, of course, the Iowa women play this afternoon, 5:30. I believe that is the game time. So, and then it gets rolling big time for the Cyclones tomorrow.
Dude, are they undefeated at home this year?
Yeah.
On the season? Wow.
Yeah, and they've played their last home game. So that's going to be the mark. 3 years ago, that team did not win a conference game.
Is that right?
Did not win a conference game. Went 0-18 in the Big 12.
Wow.
And this year went 18-0 at home. It's just, it's quite.
Feels like it bodes well for the future of the Cyclones.
Yeah, I kind of like the looks of things. No doubt about it.
From what I hear.
All right, Mike Mock Consulting. Exciting time of the year, Mike. How you doing, buddy?
Well, good. I'm all wrapped up in your sports stories. I actually did see NIU play at Toledo earlier this year. They got a little guard who's a really nice player, and I still follow because Bill Finelli coached at Toledo before he went to coach the women's Cyclones, and Matt Campbell coached at Toledo before he took the football job. So
That's
I keep quite an eye on the Cyclones and how they're doing.
Yeah, and they're doing just fine. Both counts.
Yep.
Both counts, no doubt. Everything good, Mike? It's been a while.
Yeah, it's just getting older. I passed one of those big round numbers, and back in January, and everybody tells me 70 is a new 50, and I'm here to tell you that's not true. But we're plugging along. I did get a kick out today, and I was listening to you guys go through the report, and a couple of good griefs from you, Chip, and that's usually the case. You just kind of shake your head and kind of move on. So there's some question marks, but we'll get to that, I'm sure. Yes. So how can I help today?
Well, let's start with the reports today. The only big change in the U.S. or the domestic balance sheets was that cut to the wheat export estimate. Did anything else catch your eye?
We know we've got some wheat that moved out of our backyard. Toledo stocks declined fairly vigorously and on their way to China, but not all the business apparently is going to be shipped. The carryout is still relatively snug. I always use 100 million as kind of a number to watch, and we've got some room to that. But I also think, and this is some stuff we're trying to dig up from the RMA, I wouldn't be surprised by lower acreage number coming down the road for soft red that could make things more interesting at some point in time. Maybe the other way in hard red, maybe a bump up in acres. Again, we'll see how that goes. But wheat's a tough one because you're just fighting these constantly lower Black Sea offerings, and that makes for a challenge.
Well, yeah, and every time it seems like we're getting close to getting some pricing. Oh, geez, I don't even want to say that we're competitive, but when we're getting close to being competitive, Russia just decides to heck with that, and they drop their price again. Yeah,
makes for a challenge. But we're below the crop insurance values. We haven't, we got a lot of weather yet to go. I don't see, some guys did a nice job of selling some stuff coming off the peaks, maybe more on wheat than some of the other markets actually. And I don't blame a guy for wanting to wait here. But the other thing, and Chip, I don't know if you saw it, but I did send you a note here just a little bit ago. The talk of the trade here is this shift in the Chinese information. Did you guys discuss that yet?
No, we have not. Show?
Okay, we ought to go through that because, and this is rather arbitrary. I'm talking to folks in the trade. They hear terms like unprecedented, but apparently the folks that handle the bean desk at the USDA were not happy with the Chinese import data they were getting, so they switched gears and focused and tried to come to the numbers going back 2 or 3 years using export data. And I sent you the little clip that's from the Gov about this. So they had adjusted imports, crush, and so forth. And I think that was a surprise to the market because it bumped up last year's import number, and they took this year's import number up to 105. So I think, with the market so short, and all these markets are short, it doesn't take much in the way of a spark. So the data from the rest of the report is, as you guys have already alluded to, is really a non-event. I mean, just hard to find anything. In fact, probably disappointing that some things weren't addressed, and that they've obviously punted the next month after we get through the March 28th data. But But this thing, I think, caught people off guard. There was no indication that I was aware that this kind of adjustment was coming, but they're now looking or establishing China data of export data as opposed to the import data that China supplies, and we'll see. But that was the one shocker that I got post close. But nothing. The fact that they did not change the South American numbers.
Right.
And I heard you talking about corn. I mean, we got a long way to go to get to that corn number. There some of that is obviously yet to come, but kind of a non-event other than this, for lack of a better term, unprecedented shift in how they process Chinese data.
So will that give them better data to work with?
You'd think so. There have been some discrepancies, no doubt about it. And the trade has wondered about this off and on. And there's still occasionally you'll see discrepancies, for example, between the Brazilians and what the USDA gives us. We'll have to see. I think what's always frustrating is you don't know when these things are coming, and then they get kind of dumped on you this way. Yeah. So we'll have to adjust to it. And the thing about I don't want to. I'm torn because I do think we're going to get a little more short covering here, and I think today is an indication that the market can rally, but I'm not sure how far it's going to rally. And I don't trust the Chinese situation with them cutting back on their hog herd the way they have. And, I've got some people I think that are pretty tied into China that fear a more aggressive trade war from both sides. And really, no matter who the president is in the fall, I just think that, so I don't want to fall in love with a one-time adjustment that looks a little friendly, but I do think it gives the U.S. farmer an opportunity to make some catch-up sales. And generally, we're in better shape when it comes to unpriced bean inventory than we are in corn. So it might be more of an issue of getting some new crop bean coverage.
Yep. Mike, it's been years and years ago, but USDA made some adjustments kind of on the fly like they're doing here with the Chinese wheat stocks, wasn't it?
Yes. And I get it, and it happens. And the Brazilians, I still generally would say the USDA is the best statistic gathering group in the world. And the Brazilians, every once in a while go make a 4 or 5 year adjustment. If we used to run the CONAB numbers like they were religion, and we ended up with a negative 15 million ton carryout after a few years, So you look at cash markets and spreads and try to figure it out from there. But it was interesting. We haven't talked much about it in the trade, but over the last 3 or 4 months, we've seen the USDA kind of steadily increase last year's Brazilian bean crop up to 162, and CONAB never got there. So there's always some of these controversies and the market sorts through it. I also think, and this is stuff we don't talk a lot about here with the growers I talk to in the U.S., but I think the South American farmer is also well behind his normal selling pace. Yeah. So we're not that we can't get rallies. We got one. We're in the process of one. You guys are kind of discussing this earlier, but we want to make sure we're taking advantage of it, particularly for anyone that might be aggressively underpriced, if I could use that term, because I do think we have some folks in that camp.
Right. And when you get a rally like we've had here this week in soybeans, it's not the trigger to sell everything and get caught up 100%. Yeah. But maybe do something in here, right?
Yes, absolutely. I couldn't agree with you more. And Chip, you and I have known each other long enough and stuff. I've always been a big fan of some sort of calendar selling. If you've had trouble pulling the trigger, and we're getting to that time of year, between now and Memorial Day is usually, a good time to be liquidating excessive old crop inventories. And then as you get closer and closer to the 4th of July, and depending on your space capabilities and so forth, it's usually a pretty good idea to make sure you're clipping along on your new crop hedges too. Yeah. So you look at the price, you want to reward the rallies, you look at the calendar. Again, Brazil's, let's call it 50% harvested. I think that last half of harvest will tend to find some selling down there. And in Argentina, clearly double the crop they had a year ago in beans. So we got to fight that too.
Yep. Sometimes it pays to simplify your thought process, and just taking a look at where we're at on the calendar, with how many beans and how much corn you've got left in the bin is really simplifying things, and some guys need to do that right now. We're in the middle of a conversation with Mike Mock Consulting. We're going to go demand issues, bigger picture issues next.
Let's go to the markets page at profarmer.com and check today's closes. Where July hard red winter wheat futures were 13 1/4 cents higher at 5.74 1/4. July SOW wheat up 10 1/4 to 5.50 1/4. On the corn side, I've got May futures 1 3/4 cents higher, 4.39 3/4. December corn closed at 4.72. That's up 3 cents today. May soybean futures 17 3/4 cents higher, but 11.84. Novi beans closed at 11.73 3/4, up 20 cents on the day. July cotton gave back all of yesterday's sharp gains, 400 points lower today, 93.78. Still higher on the week, though. April live cattle $1.12.5 lower, 187.60. April feeder futures down $2.20 to 254.10. And April lean hog futures 15 cents lower, 84.37. Go to tryprofarmer.com.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. If the world is your oyster, we've got pearls of wisdom on AgriTalk.
Chip
Davis.
Little teaser for the listeners here to keep them tuned in.
Okay.
On the fourth segment, I've been rethinking my relationship with oranges.
With oranges?
And I just want to run a few things by you.
Okay.
Just to make sure that I'm not completely insane.
Good.
Let's do it in the fourth. You want
Well, I don't know if we're going to be able to settle that in the fourth
Maybe
segment
not.
or not.
We could at least cover the orange part.
Okay. All right, good. I'm looking forward to it.
Excellent.
We are in the middle of a conversation with Mike Mock from Mike Mock Consulting. Mike, we've talked a little bit about the cash market here. Talk to me about the cash market, because the more we talk, the more I'm convinced you're more than a little concerned about the amount of grain from last year that still needs to move through the system. Is that right?
Yes, particularly corn. I mean, you go back to the stocks report, and again, we get another one on March 28th, and what were we, 1.1 billion more on farm than a year ago? And obviously, too, that's not the only grain that's on price. You've got folks with price later agreements that grain has moved through the system, as have unpriced basis contracts. So you've got all that yet to be hedged and dealt with. But in addition to the unpriced on-farm stocks, you've got elevators that took advantage of these big carries, and they've got a lot of corn to move too. So, I think that if a guy's looking to move physical corn, the most opportune time may be right here in front of him when he and his neighbors are going to be in the field. And that would be a time I'd want to move it, because I'm very nervous that we're not going to see the kind of summer premiums we may be used to in corn, because of we've got both commercial and farm bushels, both, that need to move between now and harvest. So that's a real concern. Yes.
Yeah. One of the conversations that I've been having with listeners is, listen, over the past 4 years, 5 years, you get to a certain point where the market has to decide, is it going to bid for corn or is it not going to bid for corn? And it's had to bid for corn the past 3-4 years. If that doesn't happen, say, by second week of April this year, Mike, then the bid's not going to happen, is it?
That would be my fear. Yeah, I think the advice that we've been giving farmers is, when you're within 30 to 60 days, no more than that, of when you've got a cash flow need or when you're make sure you get the bait. Don't wait till the last minute. And it has paid, the last few years, and it's easier to look in the rearview mirror and say, I do better this way. This is a different year, and we need to adjust our plans accordingly. Have to think back. There have been other years like this, and this is just one of them, and we have to adjust to the new environment.
Right. Okay. What are we going to learn in the prospective plantings report at the end of the month?
Well, the first thing I always like to say about that data is, don't underestimate the stocks data either. That's, I think that's really, really important. And once again, the breakdown on farm, off farm. But this is going to be one of the most unusual and well followed acreage estimates And there was a meeting of a lot of professional trade folks I know here not a week or two ago, and I didn't go down, but I did talk to a lot of the guys, and a lot of discrepancies. That I'm gonna lay it out this way for you, Chip.
Okay.
The low corn number would be based on okay, we had a lot of failed wheat acres in hard red country that went to corn last year that won't this year.
Okay.
We have a cotton price that's although incredibly volatile markets, it's going to invite some interest, and maybe rice will too. And we've got guys in the east that don't do any of the fall fertilizer applications. The west has made their commitments, but the east has not. So we could end up in a situation with a sub 90 million corn. Now, what I would tell folks, and I think this is true too, given the circumstances we've got now, I don't see how you get a 2-crop total corn beans both at 180 or higher. Some will do that. I just don't think with the incentives or lack thereof that we're going to get to that kind of number. So would we end up with something like 89 corn and 89 beans? The 249 ratio that you mentioned, might be able to make that happen. And I think that would be incredibly bearish beans and at least supportive corn. It would think that maybe that front end 396 or whatever we traded, we don't need to go any lower than that. That's a low, I think, if the acreage number is that far low. Now, the other side of the story is the West did all this fall work. They're all committed. Farmers love to plant corn, don't want to change. And if this Dees corn can get up and trade 475 to 495, no matter what beans do, well, guys plant corn. So I think there's a lot to be decided there. You put a gun to my head today, I would probably use something around 90 and a half and 88. And I think that might be a little more bearish beans than it is bullish corn. But we got to find out what the safrinha crop is. That's still a mystery, very much so. We know we stung the South Africa crop. And with the demand thing, there's a huge import margin for China. Will they import our corn along with some of these other feed ingredients that they're buying on the global basis? Those are open questions. So I'm in the camp personally that farmers like to plant corn, and the West got a lot done. So I'm kind of leaning to, it's hard to get corn under 90. I want to be respectful of the price relationships. So 90 and a half and 88 is kind of a middle of the road sort of deal, but that's where I'm at today. And obviously that can all change with price changes over the next few weeks too.
Yep. 178 and a half has been my over under number combined.
Good for you. Good for
corn
you.
And soybeans.
Yeah.
But I've also been working with a low end on corn at 92. Just because of the way the fall was last year. And
it was great. It was great.
It just feels like this corn market's going to hang on to more acres than what it wants to, and it could end up being exactly what many have feared, a bullish bean number and a not so price-friendly corn number when we get the acreage numbers. So
and if you're one of those farmers that's made that commitment, and I get it, especially in the West, they've made that bet.
Yeah.
Well, if you're talking 92 million with even if the carry out and the old crop drops to 2.1 and you shave the yield a little bit, and I think 178 might be a fair number to use today rather than what the gov's showing us, you're still going to be too big, and you run the risk of the how we play the carry game. Okay, March traded 96, 396. The May drops to there eventually because the crop's going in the ground. Then the July breaks there, SEP and Dees, and you get $4 Dees corn. So people need to, if you're committed to a big corn program, and especially if you have limited fall storage capacity, you got to start addressing that. And God forbid you still own half your old crop corn. I know a lot of folks still do. So if you're part of that 92 million, you got some things to take care of here.
Yep. Okay.
So I got a cocktail of your choice, even if it's a sarsaparilla.
Yep.
That 178 and a half. I'll take the low end, the under, and I'll take the under on the 92 corn, just so we got something to talk about.
There you go. I like that. That sounds really good. Okay, talk to me about some of the other factors that you're looking at. Some of the macro factors that are having an influence on your thoughts.
Well, that, and I think we have to really, when you guys talked about how the cotton traded today, I think we all have to adjust. That's the way markets are. I'm sitting here watching Nvidia, which has been crazy, for some time, and it traded the equivalent of 60 cents higher in beans this morning up, and now it's 60 cents down. So it's like $1.20 range in beans, and I think we're going to have a lot of that. So we've got all these pressures on farmers with so many of them dealing with costs that are now below their ability to produce at that level. And then you add some of these emotional swings. So this is going to be a real challenging year. And I think they have to be sensitive to that, number one. So I really like, sticking to the plan, sticking with the calendar sales, all those kinds of things. But I do think that the market's real short, and two things that I think could really give us a pop going into spring that we want to sell, particularly if it come in front of the report. And one would be confirmed Chinese corn purchases, and I think that would be a huge deal. And then a real drop off in safrinha crop prospects. Right. And in the longer term picture, Chip, especially with 92 million acres, I don't think that'll be enough in the long term. But with the market positioning, that might give us an opportunity to get caught up and feel a little more comfortable as we roll into spring. So that's how I'm still a seller of strength. I think that's to sum it up.
Okay. Did China buy some U.S. corn last week?
Boy, I wish I had the answer. They sure were snooping the PNW, and there's a margin. Yeah. There's a big margin. So I'd kind of be surprised if they didn't. I just worry so much about the politics. They'd sure just assume buy it from anybody else.
Yeah.
But there's a window here. Brazil won't be ready till June or July. Argentina's, starting to run on their first corn, but I'm hopeful of that. But I got to be careful. I haven't
been able to get it confirmed.
No, hope is never a good trading strategy either. I got to be careful with that. But I do think with a report that was really a non-event, and we get this price response in week 2, the market's a little too short for this time of year. It's going to give us an opportunity. We want to take advantage of it. But longer term, what are our energy policies? Once we get through the election, depends who wins. How's that going to play out? Those are difficult questions. So what's our relationship with China going to be? Is this the year, the next 12 months, where the Ukraine Russian war ends? And that's a price impactor. So as usual, lots of stuff to watch, and just be careful out there.
Good stuff, Mike. Always a pleasure to talk with you, man.
Well, take care and go Iowa girls.
There you go.
I love watching them.
There you go. Love it. All right,
Lady
that's
Hawk.
Mike Mock Consulting. Davis and I will be right back.
We don't make the news, we render it. AgriTalk. Okie dokie. Just a little bit more AgriTalk to go. Thanks for joining us today on this Friday afternoon. Great conversation with Mike Mock from Mike Mock Consulting. I am your pal, Davis Michelson. Chip Flory is here as well.
We got another Farmageddon game tomorrow.
Yes, we do. Yes, we do.
Between Iowa State and Kansas State. The number 6 Iowa State Cyclones making their way down to Manhattan.
Yeah.
For a 1:00 game tomorrow against Kansas State. Woo! That's going to be a good one.
Yeah, it's a game that I can't win.
K-State does not want to lose that game.
I wouldn't think so.
And no. I am sure that they don't want to lose that game. That's going to be a knockdown, drag it out kind of thing. Wow.
Yeah. Here's something.
Yeah.
This is interesting.
Okay.
Immigration. Big, saucy issue right now. Steaming pile of thoughts on immigration. Here's something interesting. You remember Rocky IV? Drago, the dude who was Russian, played a Russian guy, the great big guy. He just couldn't be beaten. And of course, Rocky beat him,
Right.
The actor Dolph Lundgren, originally from Switzerland, has become a U.S. citizen. Just throwing that out there.
Okay.
Yeah.
Yeah.
There you go. There you go, Dolph.
Yeah. See?
Dolph.
I mean, there is a way to do the immigration thing.
I
You just have to
must
fight
break
Rocky
you.
first and then come on in, you know?
I must break you.
Wait 40 years.
So anyway, congratulations, Dolph Lundgren. He and his wife. Welcome to our country.
Welcome.
Good luck with all that. I've been rethinking the oranges thing too. Because here's the deal. Sometimes I'm sitting here fiddling with these things for like 10 minutes, peeling them and
that's a lot of
whittling
time.
away at the white stuff. What, the membrane? The shuck? Is it the shuck?
The pith.
The pith, you're saying?
Pith. Yes. Be careful how you say that. But the pith. Yes.
Well, I mean, I've been using pocket knives my whole life, and so I just whip out the old jackknife and go to work on it. And you don't want to cut too deep. You know, you don't want to penetrate the fruit itself. And so I'm trying to get, cut that line to get the peel off, and then I'm back in for the what? The shuck? Huh?
Dude, spend the money for the cuties.
Well, I had another thought, too.
Okay.
And I hope you won't think less of me just for even thinking of this. But what if I take the whole orange and just cut it into 4 pieces? Just quarter it. And then just kind of hold on, sort of pinch the sides of it with my thumb and finger and just eat it right off the peel and forget about peeling it. Why don't people do that? Is that a thing?
I think you can make it a thing.
I feel like it's a little bit like George using a knife and fork to eat a Snickers bar.
I would like to see a YouTube video
okay.
of you making this a thing. That's what I'm looking for.
I think I can make that happen. I'm going to ask you in return to like and subscribe if you don't mind. Don't forget to hit the like button.
Absolutely.
You want to be sure to wash that outer peel pretty well before you start cutting it like that, though, I think, from what I've read.
Seriously?
Davis grew up eating dirt.
I did.
He's fine.
I don't think I've ever washed an orange in my life. Not one.
Well, okay.
This is what Joe brings to the table.
Some
who
words
knows?
of warning from Big Apple Joe.
I mean, there have been all these times I was sick over the last however many years I've been alive. Maybe it was the orange peels all along.
It was the orange peels.
These orange peels. Maybe I should just switch to kumquats. Just forget the whole thing. Forget it. I'm out.
Okay.
Mike Mock on the report.
Yeah.
Shake your head and move on was basically the thought. There were some nuggets in there, though.
Everything was moved out to the April supply and demand.
Yeah.
That's the bottom line there. Yeah. Yeah.
Go ahead.
Oh, I was just going to say the numbers are really getting critical now on the South American, Brazilian soybeans, Brazilian corn. We're to the point now where not only is CONAB, Brazil's supply side agency, they're going to have to get it figured out, but USDA is going to have to get it figured out too.
Yeah, for sure. Speaking of those South American farmers, it comes up again that they've got some work to do to catch up on some sales here. If the American farmer does too, it feels like it could get a little crowded. Yeah.
There's the amount of product in the global market that needs to move through the system is impressive right now. It's more than the cash market, the global cash market has been asked to handle for since I don't know when. So it's we've got to watch for the anything strange that might be happening in the cash market, because if it snowballs on us, Davis, a cash market happening, if it snowballs on us, the cash can yank the futures down really, really quick. Or if all of a sudden the markets decide, you know what, maybe the supply isn't near as bad as what we thought it was, the cash market can turn things to the upside just as quickly. So the cash market's got a lot of work to do. That's the bottom line.
And once again, just the thought was thrown out there. This is a different year than last year and the year before. We got to look at things just a little differently this year. Just a reminder that kind of one of those things that has kept coming up. It's
that's true. That's true, but we cannot forget the 2010 to 2014 and how similar the 2020 to 2023 at least has been on, the corn chart and following the patterns. So we've got to look at that and at the same time, treat 2024 for what it is.
Yeah.
And that is what appears to be a very unique year. All right, National Weather Service, 6 to 10 day outlook, March 14th through the 18th already. Above normal temperatures expected over the entire Corn Belt. Near normal precipitation in the middle of the Corn Belt. Above normal in the eastern Corn Belt. Jump out to the 8 to 14 day. Near normal temperatures in the center of the belt. Above normal in the west and below normal precip across the entire Corn Belt. Have a great weekend, everybody. This is AgriTalk.